One company that you may not be aware of, but is maybe the most important company that we have in the world today, is Taiwan Semiconductor. Taiwan Semiconductor makes most of the chips that we have in smartphones, in graphics cards. It is really the most advanced chip company in the world, and it's incredibly profitable. And even as artificial intelligence becomes more popular, investors start to invest more. Companies like Nvidia, Microsoft. We hear Amazon and Alphabet talking about their AI investment. Guess who is making all of the chips for all of these companies? That is Taiwan Semiconductor. So I want to go through some of the numbers behind this company today, because if you're not aware of Taiwan Semiconductor, I think it's a very impressive business that you should keep an eye on as investors. There are absolutely risks involved, but long term, I think this is going to be one of the best ways to play artificial intelligence because of the role that it plays in building chips. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. Now let's start with a couple of charts, because I think this shows exactly how much Taiwan Semiconductor has grown over the past decade. The first one I'm going to show is in red. We have Taiwan Semiconductor's total revenue. Now this is a cyclical business. So when we see demand for things like PCs and iPhones decline, that's when you're going to see a decline in revenue. So that has happened over the past year. That is not all that surprising for investors who are following this closely. But you can see that over the past decade, revenue has more than tripled. At the same time, net income is up more than 4x. And you can see that those margins are getting better too. Those net income margins, $27.8 billion in net income on $67 billion in revenue, is just a tremendous net income margin. And this is because the company has such advanced fabrication facilities, and even its older facilities that are fully depreciated are generating a lot of revenue and a lot of operating cash flow. So how exactly does Taiwan Semiconductor make all of this money? What differentiates it from competitors? And I think this is a good look at it here. This is their capital expenditures by year. You can see that about $10 billion a year a decade ago, now spending $35 billion per year on capital expenditures. That is to build those advanced fabrication facilities, 3 nanometer, 5 nanometer facilities that we're getting a lot of chips from now. That is what Nvidia's H series chips are coming from. That's what iPhone chips are coming from. Every one of these advanced chips is coming from a Taiwan Semiconductor facility that has been built in the last few years. So that's where a lot of this investment is going. And where they're seeing demand is in a lot of these advanced artificial intelligence chips. When Nvidia says they don't have enough supply to meet market demand, it's because Taiwan Semiconductor can't make chips fast enough for Nvidia. So the most critical company to Nvidia right now is Taiwan Semiconductor, and that extends across the industry. We heard just this week that Amazon has introduced new chips. Alphabet has its own AI chips. Microsoft is developing its own AI chips because it doesn't want to be reliant on Nvidia, and it wants to make chips that are custom tuned for OpenAI's models. But again, all of these chips are made on Taiwan Semiconductor equipment. The next thing that I want to show is, at the end of the day, if you're not generating free cash flow in excess of your capital expenditures, then your business isn't all that strong. But we do see that free cash flow growth with Taiwan Semiconductor. Despite spending $35 billion a year on capital expenditures, we're still getting almost $7 billion in free cash flow over the last 12 months. You can see that in 2022, that was a high point, $17.2 billion in free cash flow. So just tremendous numbers coming from Taiwan Semiconductor, and the stock is not all that expensive for investors either. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. As I'm recording, Taiwan Semiconductor has a price to earnings multiple of 17.5. That's pretty reasonable when you consider that this is kind of a downtime for their market. Price to sales multiple is 7.2. That's relatively high, but given those high net income margins and free cash flow margins, I would expect to pay more for this stock than you would for a traditional manufacturing company or even a traditional chip company. So I think these are reasonable valuations to pay for a company that is as critical to the chip market and the AI market as Taiwan Semiconductor is. There's going to be volatility in the company's revenue and earnings, but long term, this is a critical piece to the growth in artificial intelligence. And we may see margins fluctuate for some of these companies that are making a ton of money on AI right now, like Nvidia. They're able to price their products and have extremely high margins. But the number of chips that we're going to be building for artificial intelligence, and that's where Taiwan Semiconductor is going to benefit, that number I think is going to only increase. Right now, most of the AI that we're doing is in the cloud, it's in data centers, it's on Nvidia chips. We're going to see more companies making chips. I mentioned Alphabet, Microsoft, and Amazon are logical players. You're also going to have artificial intelligence capabilities built into Apple devices and Samsung smartphones. Everybody is going to be building these AI capabilities and these advanced custom chips. And the company that needs to make those chips is going to be critical. That is Taiwan Semiconductor. Now, as positive as all of these trends are for TSMC, we do need to acknowledge the biggest risk. This is Taiwan Semiconductor. And the political tensions with China are absolutely a risk for investors with Taiwan Semiconductor. This is one of the reasons that the stock is always traded for a relatively low multiple, because if something does happen in Taiwan, these are such precise machines that the fabrication facilities could be taken offline either temporarily or permanently if there is some sort of conflict. So I want to mention that because that is a risk factor. It is a reason that the stock trades for a lower multiple than you might think, given the company's importance. But I think the long-term trends are very clear for Taiwan Semiconductor. Growth company. That growth in the past decade has really been driven by smartphones. I don't think smartphones are going to go anywhere. Those chips are just going to get more advanced. But the growth in the future is going to be on the back of artificial intelligence. And every company that is talking about building an AI today is likely doing that on Taiwan Semiconductor chips. Nvidia is one of their biggest customers. And at the end of the day, Taiwan Semiconductor is going to be a huge beneficiary of Nvidia's success. So if you're interested in AI, in investing in AI, but don't necessarily want to pay the kind of multiples that you need to buy into Nvidia or even Microsoft these days, Taiwan Semiconductor is a stock to look at because this is the manufacturing company behind all of these AI companies, and I think will play a critical role in the next decade, just like it did in the past decade. So what do you think about TSMC's stock? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.